This is my weekly episode where I take a closer look at 4 stocks that are on my watch list for potential buys this week. Like many of you, I put money to work on my portfolio on a weekly basis, either adding to new positions or increasing my overall exposure to old positions and see my portfolio grow over time. The overall stock market has definitely seen a nice downturn in the past few months, and I do believe this is a great time for me as a long-term investor to continue to accumulate and continue to grow my shares. So if this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a lot of great links, my Discord channel, and also my tech channel. So let's get started.
I do want to thank the Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
All right, so let me give you the 4 stocks right off the bat. It's going to be Meta Platforms, Microsoft, Alphabet, and Amazon. Throughout the episode, I'm going to be showing graphs like this where they kind of showcase the strength of each of these companies and why I'm bullish. Obviously, I'm going to take a closer look why they're kind of down in the short term and why I, as an investor, might experience a little bit of a downturn in the short term of things, but why I'm still bullish in the long term of things. So if we take a closer look at price percentage off highs, we can see Meta Platforms is actually down the biggest, down roughly 56.9%. Next, we have Amazon, 39.1%. And for those that have been following me, you know I do not have Amazon in my portfolio at the moment, but maybe this week that will change, as I do believe Amazon is getting pretty attractive. Next, we have Alphabet, aka Google, down roughly 25.4% from its all-time highs. And finally, Microsoft down 25.18% from its all-time highs. Again, 3 out of these 4 stocks I do own in my portfolio. So first, let's take a closer look. I'm personally super bullish in the cloud market, and more importantly, in the cloud infrastructure. And here we can see this graph provided by Reg Media Sourcing Synergy Research Group. We can see Amazon is the biggest market shareholder of cloud infrastructure with roughly 33% in Q1 of 2022. Number 2 comes Microsoft, and number 3 comes Google. Microsoft was 22%. Google was 10%. So you can see the top 3 are companies I want to increase my overall exposure, and this is one of the main reasons. Next, I also want to take a closer look at the overall advertisement market, and this is data by Group M, and the chart was provided by Simran and Akshes. And in this graph, it mentions that the 5 of the world's largest tech companies own more than half, roughly 53% of all global ad revenue last year, up from 46% in 2020. So those 5 companies are Google comes in with number 1, Meta comes in with number 2, Alibaba comes in with number 3, ByteDance, the owner of TikTok, with number 4, and Amazon with number 5. And here we can see 3 out of the 4 companies I'm looking to add are top leaders in the ad revenue. So now let's actually take a closer look at why each of these stocks are down right now, and pretty much it's just global macroeconomics headwinds. For example, with Meta Platforms, what do we have? We have the overall decrease of revenue coming from advertisements, as companies might see a decrease in kind of expenses they want to do. Usually advertisement is the first. Then they also have the increased competition of TikTok, and they also have the kind of changes that Apple iOS has kind of impacted their advertisement business. So those are some of the biggest players right now affecting Meta Platforms. Now, if we take a closer look at Microsoft, what do we have? First, we do have consumer spending again. Microsoft is known to provide a lot of products for the consumer market, being laptops, PCs, and gaming. So investors might be fearing that kind of revenue segment might see a decline as consumer spending is decreasing. If we take a closer look at Alphabet, very similar to Meta, advertisement revenue is expected to go down, and we also see the competition from companies like TikTok. Now, if we take a closer look at Amazon, Amazon is a huge e-commerce store. Global consumer spending decreasing means less revenue in its e-commerce business. Again, like I mentioned, all these companies have huge kind of potential in the future. And we're going to take a closer look at right now. So like I mentioned, first is Amazon. For me, Amazon, even though their e-commerce store is expected to maybe not see huge growth or might see a slowdown with consumer spending, they are seeing strong growth in their AWS segment, which is their clouding market. Like we all saw, they are the number 1 cloud infrastructure in the market right now. Some other markets that I'm bullish is the advertisement service. This is growing dramatically over time. Subscription service is also one that I think is pretty impressive, because Amazon is kind of creating all these awesome solutions, from Twitch to their audibles to TV streaming, which then they can kind of create even more advertisement places in the long term of things. Now let's take a closer look at why I'm bullish in Microsoft. This is a company that if they do acquire Activision, in compared to their full year of 2021, this would have actually been the number 2 largest gaming company. And I am very, very bullish in the gaming market, and I think that would be pretty impressive. Outside of the gaming market, this is a company that also makes a lot of money, like we saw from their cloudy market and from Office and Enterprise solutions. I do believe Office and Enterprises continue to be pretty strong. Finally, they do have the search and advertisement segment, which is a very small portion. For example, in their most recent quarter, it made a little bit over, I want to say maybe 6% of total revenue was search and advertisement. But most recently, they actually won that partnership with Netflix, and now they will be providing the kind of the advertisement system for Netflix. And I do believe that is going to be a huge win for this company and make it a stronger advertiser player in the future. If we take a closer look at Alphabet, first we can see in 2021, this was the number 1 company to make the most ad revenue. Also, if we take a closer look at this chart, we can see total streaming as of February of 2022 represented only 28.6% of total US TV time. And we can see the number 2 most kind of used product is YouTube, with around 5.7% of the total US TV time market. Also, if we take a closer look, Hollywood Reporter showed this pretty cool graph of the top live TV providers. And we can see outside of your regular cable, YouTube TV is actually the 5th largest with roughly 5 million subscribers, much higher than Hulu. And it's only 3 million away from Dish. 3 million is still a lot, but it does show how strong YouTube TV is and how close it's getting to kind of that cable market. Finally, Meta Platforms, aka Facebook. This is one I'm super bullish on, but many people are not. Like I mentioned, a lot of the macroeconomics earlier on that are affecting this stock. Like we saw, this is also number 2 in the global advertising market, which makes this a very, very strong company. Obviously, TikTok is getting some market share, but I don't think Meta is gonna let that slide for much longer. Meta is a company that's focusing a lot in artificial intelligence, and to me, this is what makes me so bullish in this company. The amount of engineers that they have working for them, the amount of products they can create with AI, and all the information that they have, I think it's gonna, if they do everything successfully, it can make this a huge winner. I do believe out of the 4 companies that I looked at today, this is one probably with the most risk behind it, but because of that, I do believe this one also has the most reward behind it. So these are the 4 stocks I'm taking a closer look at. Finally, I just want to end with some quick charts. All these companies have plenty of cash and short-term investments. Some of them might have a nice amount of debt, but nothing their cash can't cover. All of these are also super positive in cash flow from operations. And if we take a closer look at forward EV to EBITDA ratio, we can see these are sitting at very cheap values. So for me, all 4 companies I do believe have the potential of being strong wins in my portfolio in the long term of things. Let me know in the comments, what are some stocks you are thinking of purchasing this week? Take care, have a good day, and see you next time.